10-year note yields moved higher, printing at one-week highs today, up at 427, before closing out at around 426, up 3 basis points. Now, the early data sets we got came in the form of CPI, and it came in as expected, and the market immediately priced in next week's 25 basis point cut as pretty much a slam dunk. This was followed by a very strong 10-year note auction with strong demand, and yields went higher. Interesting. While taking a step back and looking at some of the inflation data, it looks like that longer-term inflation remains very uncertain as to the directionality moving into 2025, causing 10-year note yields to actually move higher amid that positive data. So seeing yields move higher today, closing out at 426 and up 3 basis points. Now, what does this mean for volatility? Well, check out that CVol index over at cmegroup.com. You'll see that volatility went lower today despite the fact that yields went higher. After last week's event of the non-farm payroll number was passed, this week's big event was CPI, and now it's passed, and we saw volatility moving lower after the event. Lastly, let's talk about what we have tomorrow. Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claim number. We will also get PPI, and that will be followed in the afternoon by the third leg of this week's refunding via the 30-year auction. So midweek yields moved higher to one-week highs, closing out at 426, up 3 basis points today ahead of tomorrow's PPI claims and a 30-year auction.